Earnings season is a greatly anticipated time for traders and investors. To add to the excitement of potential rapid price changes, the season brings with it a torrent of forecasts, analysis and news from both companies themselves and other media sources. But what exactly is earnings season and why is it important for traders? Earnings season is when publicly traded companies release their quarterly earnings reports. They are generally released in the month immediately following the end of each fiscal quarter. So if a company's third fiscal quarter ends at the end of September, its earnings report will usually be released in October. These reports help investors comprehend the financial health of a company, and they're also a good indicator of how the broader economy is performing as a whole. Generally, better than expected reports will help boost demand for a company's stock, and worse than expected reports reduce demand for a company's stock. If you want to trade earnings reports successfully, then you need to know what's included in an earnings report and how that information impacts a company's share price. Number 1, earnings per share. Investors use this metric to calculate a company's profitability. To calculate the EPS, you just need to divide the company's net profits by the number of shares outstanding. The higher a company's EPS, the more profitable it is, and it can indicate growth and stock price increases. Number 2, revenue. This is really simple. It's just the company's sales minus the cost of goods. If a company's revenue is growing, then this is positive as it highlights that the company is expanding. Number 3, outlook guidance. A company's earnings report often includes guidance about how they expect the business to perform going forward. Markets are generally forward-thinking, so the guidance provided by a company can have a significant impact on whether a company's share price rises or falls. For instance, when Nike released its quarterly earnings report on the 30th of September 2022, despite reporting better than expected earnings, its share price fell over 12% in intraday trading after issuing weaker outlook guidance, highlighting how vital guidance can be in influencing the company's share price. Earnings season tends to create stock market volatility, meaning there'll be plenty of potential trading opportunities for you to benefit from. If you don't want to miss out on these opportunities, then you'll need to know how to trade earnings season. So here are 3 steps you can take to do this. So number 1, research and analyze the stock you want to trade. How do you think your chosen company performed over the last quarter? If you anticipate a weak earnings report, you could go short, and if you anticipate a strong earnings report, you could go long. Number 2, open a position on one of Easy Market's trading platforms in just a few steps. Decide your amount to trade, the amount to risk, and whether you think the price will increase or decrease. And number 3, carefully monitor your position and close it once the price reaches a level you're satisfied with. So there you have it, that's how you could trade earnings. If you'd like to know more about how you can trade earnings season with Easy Markets, follow the link in the description.